Alright everyone, welcome back to the channel for another update. So I've just noticed some major warning signs over on Bitcoin when I was looking at the 6-month time frame and the 3-month time frame, and I want to share these warning signs and new perspectives with you. What we're going to be talking about today is obviously the higher time frames. I'm going to answer the following questions. What do I think is going to happen with Bitcoin in September? What is the next move for Bitcoin? Where does Bitcoin bottom? When does Bitcoin bottom? Let's talk about all this and more. Well, first of all, I do have to acknowledge what is going on in the higher time frames. Now, in my last couple of videos over on YouTube, we did actually call for this massive pump. I specifically mentioned in those two videos that 21,700, which is the long-term moving average on the daily EMA ribbons, is the most likely region that I see us getting rejected from. This was actually my utmost target. I didn't expect us to push above this, and obviously we're not even up to this right now. We're still about $300-400 away from it. It is possible we can move up to 21.7 before moving back down. Here's why I think we're going to move back down. Well, we're steadily approaching the heart line over on the money flow index. Now, the last couple of times we have approached the heart line, literally every single time it has been subject to a catastrophic drop in the markets. Without question, every single time it just absolutely landslides. And this normally happens because we revisit these areas on the money flow index, which are at like 20, 10, so oversold, that when we do have these bounces back, we really only get up to the heart line before continuing the trend to the downside. Now, speaking of trends, the trend has obviously flipped. On the daily time frame, we were looking at this a couple of weeks ago. We were talking about how you've got lows, higher highs, higher lows, higher highs, higher lows, and you can just see this trend repeating, rinse, repeat until boom, you come all the way down and wipe out this. You take the next leg to the downside, boom, you wipe out this, next leg to the downside, boom, and as you can see, it's a little bit hard to see, but if I put a horizontal ray over here, you have wicked beneath this. So where is the only support floor for Bitcoin that we have not absolutely violated? Down here, 17,500. I think we're going to absolutely violate that level. It's not even funny, but nonetheless, this is exactly what I've been calling for ages now. Now, I do also see this region over here. When we did break down, this was support, flip resistance over here. This was resistance, flip support. This was support here. This was kind of just I don't even know what this was. We completely landslided for it, so I won't count here. But then you can see resistance, and what do you know, again, once again, bada boom, you come back to it after days of not coming back to this level. I mean, we haven't retested this since the 26th of August, and when we were up here on the 26th of August, we were at 21,900. So it's interesting. It's definitely interesting, but lower time frames, they do look garbage, and I think we do need to massively send it to lower price targets before the bottom is in. The stock market, SPX as well, I'm seeing very similar things play out. On the lower time frames, it really just looks like we're coming up to another previous resistance slash support zone. This has been, you know, resistance, support, this has been support, this has been resistance many times. So we're coming back up to this as resistance right now. I don't see the SPX clearing 4,100. So that's the lower time frames out the way. Also, obviously, congratulations to all of the bulls out there. You're no longer down 75%, you're now only down 69%. So we move. Bear Squad has been on the sidelines for a while, but, you know, 10% pump after a 75% dump is good, right? Sure. Let's move on. So, 6-month time frame, what is going on? I'm going to be looking at this on the linear scale to start with. Well, look at this bearish engulfing candle that came about on the apex of the new year. So, January 2022, this opened and we got the nastiest bearish engulfing candle we've ever seen for Bitcoin. I mean, look at this on the linear scale. It just absolutely violates the chart. Now, when we do look at this on a logarithmic growth curve scale, you can definitely see this is obviously a typical bearish engulfing candle. Now, prior to this bearish engulfing candle, the previous bearish engulfing candle we had was right over here, July 2014. Now, you can see starting off in January, what we actually had was a doji candle signaling indecision, and then we followed it up with the bearish engulfing candle, and obviously what followed suit, you had another 6-month capitulation to the downside before the bottom was in. Now, the only other deviation we've got from this is back in July of 2011. We had somewhat of a bearish engulfing candle, wasn't too strong, and then, you know, we basically immediately pinged up to the upside. So what we know is we've got so far 1, 2, 3 sets of data points that have data traded after them. So obviously, you know, it's pretty much ethereal. Are we going up or down? I think we're going down. That's what I'm trying to explain here. But based on previous trends that we've only got these 3 data points, and this one didn't play out, so we've got approximately a 66.6% recurring likelihood of bearish continuation on the 6-month time frame. Now let's head over to the 3 monthly time frame, and this is where it really starts to get a little bit nasty when you do look at this bearish engulfing candle. First of all, obviously starting off on the linear scale, because I want to show you what happened. This one singular 3-month candle on April down to July capitulated through 1, 2, 3, 4, 5 3-month candles. Yes, that is 15 months worth of data traded. And then you also have to remember we sliced through some of this as well. So we sliced through more than 15 months worth of data traded like it was absolutely nothing in the first 3 months. And we are now celebrating, retracing to, there we go, not even, I should have drawn this from down here. And then when I do draw it from down here, you can see we actually did retrace the 236. So absolutely bullish, right? Bull market confirmed, explosive move to the upside. No, just stop. We've retraced to the 236. This is absolutely nothing special. A 10% pump after a 75% dump is absolutely to be expected. Now, I'll show you what I mean as well, because this has happened other times on the 3 monthly. So if we do head over to the 3 monthly time frame on the logarithmics, once again, noting this bearish engulfing candle, just literally taking out all the data that we've got traded over here. You can look at this time over here on the 3-month time frame. We had a bearish engulfing candle. This was followed up by 3, 6, 9 months worth of bearish continuation. I wouldn't particularly say that these were bearish engulfing candles. I mean, you might be able to make a stretch that this was slightly engulfing. I'm personally not going to say this was a bearish engulfing candle, even though it does fit my bias of continuation. It just doesn't look engulfing to me, so I won't pick that point. But from here, you can definitely see you did get massive continuation from that bearish engulfing candle. Over here as well, you can see, starting off right here, this was a beautiful bearish engulfing candle, and you got another 3, 6 months, about another 6 months. It could have been about a year into July. Let's see, where did we actually bottom over here? No, we did bottom on that last leg to the downside in July. So it was, moreover, bearish engulfing candle, 3, 6, 9, 12 months to the downside after we had that bearish engulfing candle. Over here, we also had a bearish engulfing candle July 2011, and it was followed up by at least another 3 months of movement to the downside. So over here, we've got 1, 2, 3, 4 data points over here. This one obviously hasn't panned out yet, so we don't know how this is going to work out. But these 3 bearish engulfing candles so far have played out 100%. So based on this, you know, once again, just like I hope we agree that the 6-month time frame was bearish, I'm also hoping that we agree that the 3-month time frame is exceptionally bearish. Now, on both the 3-month and the 6-month, you can really see why are we bouncing 10%? Why are we lollygagging at these levels? Why, when you look at the daily time frame, why are we just violently chopping up, down, up, down, up, down, up, down? I mean, you can't leave trades open for more than a week in this market situation. It's definitely just been a horrible scenario. So if you are still surviving this bear market, congratulations. I was here in 2018, and I'm here to tell you that what we're witnessing now is a lot worse than what happened back then. A lot worse. A lot worse. So that being said, once again, is it any surprise that we're having like a 10% pump from the previous all-time high in 2018 when we've literally never done anything this bearish? Absolutely not. Once again, remember, I mean, just look at the 3-month and the 6-month time frame. We've barely retraced the first fib. So the notion that we're bullish right now is absolutely ridiculous to me. Nonetheless, 3-month time frame, I would say, based on what we've seen before, we should also be witnessing continuation to the downside. Now, let's head down to the 1 monthly time frame for both of these, because there are some regions that I do want to highlight for where we are right now. Obviously, these regions above here do not matter too much. This is the most important level to keep your eyes on right now. 20,000, that psychological level, Bitcoin's previous all-time high. I think Once we break beneath this 20,000, the real major breakdown that I've been talking about for a while now is going to start taking place. Well, I mean, to be honest, I've been talking about this major breakdown since like 45, 46,000, and we're now down here at 20,000. So I would say, you know, from the bearish predictions that I've been predicting, we've done quite well with these. But on the monthly time frame, once again, going off topic a bit, but let's highlight some regions that I'm looking at for potential bottoms. Now, on the 1 monthly time frame, you can see bada bing right here, 20,000 candle body close right down here, December/January 2018 at that 13,700 mark. And then if you drag this out, you can see this beautifully lines up. I mean, this is perfect. Candle wick is all the way up here. You've got candle body closes at the all-time high. So 20,000, massive psychological level. Where's the next level to the downside after that? It is all the way down at 14,000. Where's the next level to the downside after then? Well, you've actually got a level down here at 11,700. And personally, I normally use the 50 and 100 moving average in some of my lower time frame predictions. Unfortunately, we don't have too much data traded on how the 50 and the 100 is playing out on the monthly time frame for Bitcoin, but typically, when the price action crosses the 50 moving average, it typically comes down to the 100. This is currently more so what I'm expecting at this moment in time. However, I don't particularly think that we have to come down as low as 12,400, which is where the 100-day moving average is. I also think that the bottom is not going to be in until December, January, round about Q1 of 2023. I've talked about on my YouTube channel why, looking at the Nasdaq fractals, looking at the VIX fractals, looking at the stock market fractals, looking at how tech stocks bottomed in advance of the stock market in 2008. I've made so many of these 2008 comparisons. So if you're new to the channel and you want to know more about these comparisons and why I particularly think we're bottoming in Q1, be sure to check out my channel. I normally differentiate the stock market videos by having a blue emblem in the top left instead of the orange Bitcoin ones. But nonetheless, we're going off tangent. We are now beneath the 50 moving average, and we have not actually come back up to backtest this. So 22,400 is where the 50 is. Now, is it possible we can move up to 22.4 before breaking back down again? It is absolutely possible. I personally don't think we're moving that higher. Once again, like I said at the start of the video, 21.7 is where I see us moving up to. Now, on the monthly time frame as well, a couple more things to point out here. We are also forming a very nasty bear flag. I'm going to take the conservative price target of this because I think it's going to be curtains down here, 8,500. What I will say about this is I don't think the price target's going to get hit, but this bear flag is valid, and if it does break to the downside, even though I'm not targeting that much of a lower level, it is still something to keep your eyes on. Something else to keep your eyes on is let's clear up everything that we've done. So 2018, right? What do? You know, it took us 1,096 days to get above this level. Now, there was a few levels over here. I mean, if we highlight them, you can see it right here. You can see, boom, hit it here, boom, hit it here, boom, hit it here, broke down. You had a rapid succession of weekly closes that were just lowering after you did get that rejection round about the July 2019. You can also see we came up to here in October and we had a wick down to this level. And we had a candle body close up here. And then as you can see over here, June of 2022, you had touch points here. And right now we've just been sitting at these levels for a long period of time. So what I'm trying to highlight here is these 3 lines in the sand. These are super important. And as you do capitulate beneath the first line, 20,000, expect the next line, expect new lows beneath the 17,500 region, and then after then expect lows down to 14,000 and then potentially look lower. But what I really want to show you from here is that we literally took 1,100 days to break out of this downtrend. We subsequently, from the lowest one, so you know, kind of bear in mind I potentially might be cherry picking this a little bit, we went up 400% from this downtrending level that was literally keeping us down for, you know, more than 1,000 days. And even if you're looking at from the all-time high, we went up 250% without even coming back down and retesting this trend line. But why I think it's important to look from here is because, you know, from the breakout of the candle body close and this level here, I mean, the most amount of touch points are around here, we went up, you know, 400%, and we have not come back down and retested it as support. So just a couple of ideas. That's really all I wanted to share with you. On the 1 monthly time frame, like I said, 12,500 could be in play. I personally think it's a little bit low for me. If we do drag this out, you can see if we do come down and bottom round about Q1, so let's say late January / early February, what's going to be interesting is this 100 month moving average is actually going to move up to 14,000, which lines up with this Elliott wave theory as well. You know, there is touch points here, and if you're looking at the lows, this would be your 5 wave. So if you bottom above the candle body closes right here, then you're going to be bullish. So there's just a lot of confluence at these lower levels. And for all of the reasons that I talked about, you know, looking at the 6 month time frame, looking at the 3 month time frame, looking at the monthly time frame, talking about how normally when you cross beneath the 50, you come down to the 100. The economy is in shambles. And also, what do I expect to happen for September? Well, typically September is a very bearish month. Midway through September as well, I believe September the 15th, I don't believe I know. That is when we're estimated, bear in mind, estimated to have the Ethereum merge. Now, we've been estimating to have the merge for years now, so you know, you can kind of throw that out the window. The ETH merge will happen whenever the ETH merge happens, but September the 15th, we also have the Mt. Gox. Yes, the cryptocurrency that was locked up with Mt. Gox is now getting refunded. So there's tons of bearish news going out in the markets right now. Monthly time frame, Brave Liquid Index on the money flow index looks like we really want to capitulate. And also you can see, you know, the money flow index is normally a pretty good indicator for the bottoms in Bitcoin. You know, you pair this with something like volume, and we're looking for a volume confirmed bottom. So the reason why I like using the MFI is because it's like the RSI. People call it the volume weighted RSI because we also take into consideration the volume. Using the MFI to identify the absolute low is going to be something that I'm going to be doing on this channel when I do think the bottoms are getting near. But right now, I don't think there's any signs that we are anywhere near the bottom. So like I said, my friends, that's all I've got for you today. Just a couple of new perspectives. Let me know what you think of this down below. Do you think we've already bottomed at this 17,500 region? Do you think we're coming down to 14,000, which is my personal prediction? Or do you think that we're going to rocket down much quicker than I'm expecting, potentially going down to 10k or even lower? Let me know down below. I'm interested to hear your opinion. But as always, my friends, cowboy out. Peace.